There's a lot of hype around the Australian property market and whether we're in a price bubble. Now the reality is when we see low interest rates, what it means is it increases our ability to afford property. Now we've got to understand the psychology behind buying property in Australia, just as in buying property in most countries, where we see it as the great Australian dream, the great American dream. Now, affordability, or the story goes back probably to the 40s, 50s and early 60s. So we finished off the Second World War and Australia was quite a prosperous nation. So all of our workers came back and basically we were quite active in terms of building out Australia. And that was when the first story about Australians owning their own home and having their quarter-acre block or whatever it may be and driving their Holden cars. Now, in the late 50s, early 60s, what we actually saw is a trend occurring, and that trend was the relationship with property values and incomes. Okay, and why does that relationship exist? Well, take it from your point of view. If you're sitting down and you're thinking about actually trying to go and buy a property, now you go and speak to your mortgage broker and you've got an idea in your mind in terms of what it's going to cost you. So you say, you turn to your partner and you say, well, I think we could probably afford to have a loan of $400,000 and maybe buy a property worth $450,000. Okay, so you go and sit down and talk to your mortgage broker and the first thing they tell you is you can probably borrow as much as $550,000. Now that scares you initially because you've done your budget and you're sort of thinking, well, what can we actually afford? But the psychology then kicks in and the human interest and human nature takes shape. So you go home and you know that the broker said, you could buy for up to $550, but you set your budget at $450. Well, you put your details and start your searching in realestate.com and domain.com and you start looking at properties. Well, guess what? The properties that are advertised in the $450 range are actually worth $500 or $550. So you start to go out into the field and do your research and you start seeing these properties that are just so much better in quality, so much better in location, and you start to convince yourself that it's probably worth spending that extra to get in that right location. And in some cases it is from a long-term point of view, but you've got to be concerned about your budget. Now, coming back to the affordability story, that's exactly how property prices grow because we're attached to the properties emotionally. 70% of properties are owned for owner-occupied purposes, so they drive the market. They drive the value story. So when you're looking at that, that's what affordability is all about. So when we measure affordability and whether it's affordable, we see properties selling in blue chip locations for a couple of $1 million, and we see inner city locations where prices are now $1 million. Well, that's all relative to the household's income. So the people who are buying those houses are potentially double household income professionals, and they might both be on six-figure salaries. So when you look at $1 million loan for a couple who may be on household income of $250,000, it's all relative, isn't it? So when you get a combination and a consistency and demand of those people, that's what pushes prices higher. And that's why when we move out of the cities into the more greenfield areas and the new estates, that's where the cheapest land is and that's where the cheapest builds are, because they're the people who are just starting on their journey and their incomes mightn't be as strong. So I don't buy into the global story or the macro story that Australia's in a property bubble. That's just simply not true. The people who are actually being able to afford these are being able to get the money. And we're not seeing the banks do silly things around lending money at extraordinary levels. So I suspect this will continue, and we're certainly not in a bubble yet. But what we are seeing at the moment is a hype. There's a bit of a sense of urgency that I've got to get in now. So what you will see in these cases is properties will overshoot themselves in some areas. So, their price point, that affordability price point might be $750 and they go to $800. So in a year's time or 18 months' time when things slow down and it becomes a little bit harder to borrow money, those property prices might come off for a bit. But over the longer term, we'll see incomes continuing to rise and we'll see the values of those properties move forward. So don't be too concerned about the affordability story. It's a story of incomes and relationship with the emotion of buying property. Now, as property investors or advising property investors, we need to tap into that psyche. We need to make sure that where we're buying for our clients is areas that deliver long-term returns and long-term profitability and returns for our clients. So the story of affordability, is Australia affordable? It's still relative to the incomes that are being experienced in Australia. Don't look at international cities. Don't look at comparisons with other cities, because I can make comparisons to downtown, New York in certain affluent areas, and you can buy apartments in those areas for $2, $3, $4 million. So is that affordable for the rest of America? No, it's not. Not when you consider that the minimum wage is around that sort of $7 to $8.50, and the Australian minimum wage is around $16 to $17. So when you're talking about that, Australians' median house price sits around that sort of 500 to 600 range, and the American median house price sits around that 300 to 400 range. That's relative to income, isn't it? So just understand that when you're actually looking to buy properties, it's a story of understanding the incomes in those areas, and that's going to deliver you the outcome. Thanks for watching.